We're live now.
Okay, Shelley?
Yes, we're now live.
Okay. Introduction. Good morning and welcome to this meeting of the West Mercia Energy Joint Committee. I've put my mic on, sorry about that. Forms of housekeeping. I'm obliged to inform you that this meeting is being live streamed and recorded. Could I also ask you to please ensure that mobile phones are switched off? I shall now ask members of the committee and officers to introduce themselves. I'll start with myself. I'm Councillor Gwyn Butler, Cabinet Member for Finance, Corporate Resources and Communities at Shropshire Unitary Authority. Current Chairman.
Councillor Adam Kent, Councillor at Worcestershire County Council and Cabinet Member for Economy and Skills.
Barry Hanson, Head of Policy and Governance at Shropshire Council.
Joe Pugh, Head of Finance and Bidding, West Mercia Energy.
Michael Evans, Managing Director, West Mercia Energy.
Also Head of Energy Procurement and Energy Services at West Mercia Energy.
Gavin Owen, Head of Business Development, West Mercia Energy.
David Ross, Cabinet Member for Health and Wellbeing, Worcestershire County Council.
Councillor Dana Harrington, Cabinet Member for Finance, Governance and Customer Services.
Councillor Ollie Vickers, Cabinet Member for the Economy at Health and Wellbeing Council.
Morning, Councillor Bruce Stoddart. I'm the Cabinet Member for Finance and Corporate Services in Herefordshire Council.
Thank you. Oh, sorry, we don't finish yet.
Shelley Davies, Committee Officer.
Hello everybody, Jane Holden, Executive Director of Resources at Council and Treasurer for WMA.
And who have we got online, please? Just see some names. We've got Adam Williams.
Hi, I'm Adam Williams. I'm the Principal Auditor at Shropshire Council.
And Mr. Vaughan.
Good morning all, Richard Vaughan, Sustainability and Climate Change Manager at Herefordshire Council.
Thank you very much, welcome. We've just noticed, Shelley, that obviously we haven't got a Vice Chairman at the present time. Are we able to put that on the, to elect a Vice Chairman, or will it need to be agended?
Not been
Yeah.
re-agenda, so
It has to be on the next meeting. Okay. Right, okay, thank you for that. Right, minutes. To receive the minutes of the joint committee meeting held on the 22nd of March 2024. No, thinking logically, it's just you and I again.
Yeah.
We're at the actual meeting. You propose, I'll second. Yep, I've got that sorted. Item number 3, public questions.
there's none.
There's none, still good. Any disclosable pecuniary interest from anybody at all? I think that would be. No, thank you very much. Right, item number 5, supply contracts, and invite the Director of West Mercia Energy Joint Committee to provide a verbal update in line with the West Mercia Energy Joint Committee standing orders. Welcome, Nigel.
Thank you, Chair. So in accordance with our standing orders, and obliged to advise members at each joint committee of any entries in the register since the last meeting. As last time, there's no entries to advise you of. Thank you.
Thanks very much. Item number 6, statement of accounts and annual governance statement 23-24. That's over to James. Thank you.
Thanks, Chair. Just a very brief introduction. Item 6 is statement of accounts. Item 7 is the external audit on those accounts. So we can take those 2 items very closely together if you're happy with that, Chair.
Yeah.
In terms of the accounts themselves, they show the usual set of statements that you would see within the statement of accounts and the annual government statement, which is produced every year and is appended to that statement. Overall, it's in a good position over the year. A return to significant profitability for the organisation, increases in turnover from last year, and a slight fall in gross and net profit as a result of the additional costs incurred. Those costs do not relate to, however, the operating expenses of the organisation, which are slightly down on the previous year. We are seeing a healthy cash position and strong balance sheet, and as has been reported throughout the year to members, we're seeing the organisation working to a high standard, and the level of cash that's held within the bank accounts, on the back of contributions that are sat there from other authorities and have not yet been reclaimed. We're seeing a high level of interest being returned as well, which helps to bolster that position. Later in the agenda, there is a distribution of the surplus as a result of the profits that have been incurred for the organisation over the year. As I say, have taken any questions, but we may wish to take this alongside the audit findings report in terms of the technical details around the points made in the statement.
Any questions from anybody? No. From my perspective, I think it might be useful to take 6, 7, and 8 in one go.
Yes.
Yeah, is that all right? After we've had all the information, and then we can actually take it on, Matt, if that's all right. Is that right with you, James?
Absolutely fine, Chair.
Okay, so if we go on to item 7 then, please. The external audit.
So the external auditors, WR Partners, have completed their audit work for the year ended 31st of March 2024, and they'll present their audit findings to the Joint Committee. The Joint Committee are asked to consider and endorse the audit findings report. Over to Alex from WR Partners.
Good morning, everyone. Alex Riley from WR Partners. As Joe mentioned, we completed our audit on the year ended 31st of March 2024, and the audit findings memorandum, which we want to just turn a few pages on, really pulls out, summarises the work we performed and any key results from that work performed arising in the what is a clean audit opinion. Before I probably just turn a few pages and pull out the key matters of this year's audit, just probably worth mentioning in terms of the key controls, the underlying processes within West Mercia Energy. We didn't have any issues arising in terms of our scope for the audit. There was no issues in terms of the questions we asked, getting responses, and all the evidence we required to get, we were able to get. So really a unhindered audit process, which is obviously very, very favourable. So I will just turn the pages through the audit findings memorandum. There are a few bits we're required from audit regulations to ensure we communicate with yourselves. So I'll pull out those key matters. Broadly speaking, there aren't any significant issues to report back to the Joint Committee. So what I'm going to run through really is for reporting purposes. But then if there's any questions, we can take any questions once I've run through. So I think on terms of the package we sent round, if I start on, it's page 63 on there and page 2 of the audit findings memorandum, which just summarises the overview of the audit process. And again, just to really firm our audit approach is risk-based. We place particular emphasis on audit areas which are considered to be high risk, and I'll pick up on those areas in a second. As I said previously, we've not had to change or alter our audit plan. We communicated our audit plan at the Joint Committee meeting in March, so we've been able to perform our audit procedures in line with that plan. In terms of the completion timetable, just wanted to pick up that we met with Joe Nigel, the management team at West Mercia Energy, 6th of August, to initially run through this document and discuss any matters really arising from the audit work. So we performed our audit work in July, and as I said, really a really smooth audit process, which is testament to good work of the finance team. Moving on to the next page, which is page 64 on the pack, just quickly want to touch on materiality. And this slide will have been in here for previous years, but for any new members or attendees, materiality in effect is if there is a misstatement, it would be considered to be material if it could reasonably be expected to influence the user's economic decisions when using the financial statements. So materiality we set as auditors, and it is a judgment we take and we make, and our benchmark for materiality is 1% of a 3-year average of turnover, and we cap that at £1 million. That's the overall materiality. So in effect, if there was any issues with transactions or balances over that amount, those would be what we'd be reporting to you today. Because that materiality basis is based on, I guess, the top line revenue of the financial statements, we do have reduced levels of materiality in other areas. So expenditure we reduced to 50% of that. And then in terms of related party transactions, we deem those to be material by nature. So any sort of disclosure we would expect to be included. On to the next page is page 65. Really, this just concerns the status of the audit. So there is no further outstanding information we require for the audit, and our audit work is complete. Throughout the next few pages, you'll see the traffic lights system on the document, green, amber, and red. I think they're all going to be green, which basically confirms that we've reached the conclusions we needed to with no issues to report. And just at the bottom there, to confirm that we expect our audit opinion to be unmodified, so a clean audit. On to the next page, page 66, just summarises our audit findings in relation to significant and elevated audit risk. So as I said at the intro, the audit there's particular emphasis on risk areas, and the risk areas, some of which are prescribed to us by audit regulations. So firstly, fraud through management, override of control is a non-rebuttable risk, which means that we have to include that as a risk on any audit which is performed. Potentially that would be looking at any, as it says, any override of controls, which might then unduly influence the figures. As you can see on the right-hand side of this page, in our assessment, we've got a green traffic light. We've not identified any matters to report. Fraud through income recognition is another presumed risk under ISA 240. So it's presumed risk, and the auditor could rebut that risk if they want to. We haven't rebutted the risk, and if I'm completely honest, it's very, very unusual for an auditor to rebut that risk. That said, we've performed our planned testing on revenue recognition, and again, no issues to report. And the final risk we identified is in relation to going concern. So going concern is the concept and the understanding that the entity will be able to trade for a future 12 months from the date we sign the account. So really looking at the 20th of September 2025. Due to the volatility of the energy sector over recent years, we felt it was right to include this as an elevated risk. So an area where we again paid more emphasis on procedures. And as we go on to the next page, which is page 67, this just summarises the work we performed in relation to going concern. So overall, we're satisfied with the preparation of the financial statements on a going concern basis. So we're in agreement with management that there's no material uncertainties in relation to going concern as things stand. So management, really led by Nigel and his team, perform a management assessment of going concern. So they pull together future forecast budgets, and a sensitivity analysis goes into those numbers. It looks at things like customer retention, new wins, ongoing energy reductions, trading within the energy market, and trading conditions. And we've then discussed, and at times we challenged management on those assumptions used. Overall, as I said, we're comfortable with the going concern basis of the accounts preparation. So we've been able to conclude on that risk. Page 68 is actually a follow-up of a point we raised last year. And again, I just wanted to, for clarity, just to flag right at the start, it's the same point as the previous years, and there has been no change in the basis of accounting for the pension asset recognition. The pension scheme valuation, which is performed by a qualified actuary, shows a surplus position of just over £1 million. Accounting standards only allow us to recognise the surplus to the extent that its future contributions to the fund are expected to be decreased or refunded. So there is in effect an asset ceiling which can be recognised on that pension scheme valuation. That was last reviewed at the end of the 2023 financial year, and an asset was recognised. That asset continues to decrease this year as the benefit of those reduced contributions flowed through the year. So there's a small reduction in the asset position within the financial statements. As I said, again, that's in line with the accounting basis as per last year. Given the size of the numbers, we just wanted to bring that to the attention of the Joint Committee. Okay, moving on to page 69, which summarises the summary of the key audit findings. And this is really where, if there were any potential impacts on the reported numbers, this is where we would flag these to you. So you can see the table on the correct and misstatements. When the draft accounts were presented to us as the auditors and we started our audit procedures, they showed a total comprehensive income of £910,000. And in performing our audit procedures, we have not identified any required adjustments to that number. So that is the total comprehensive income in the audited accounts. In comparison to last year, you can see there was a pension scheme adjustment, which is what I just referred to. So that came in as part of the audit process last year. Within the 910,000, management had already made that adjustment for the current year, so we don't need to adjust. And really, just for completeness, there are no uncorrected misstatements which have been identified during the audit, so there aren't any potential errors or variances we've identified which we think need adjusting for. So again, a really clean audit. The next two pages, so page 70 and page 71 on the pack, I won't run all through all these in detail, but in effect, these are all the other aspects of the audit process we've looked at and we are required to report back to you. You can see down the right-hand side the little green traffic lights. So yeah, no issues to report back. I will just pick up on page 71 under subsequent events. So subsequent events, we're required to obtain from management and also those charged with governance, so that is members of the joint committee. If there's any subsequent events from the year end to today's date, which may need disclosure or event or adjustment within the financial statements, we understand from our conversations with management that there aren't any of such events. So I just wanted to make clear our understanding. Finally, I just want to confirm our independence from West Mercia Energy in performing the external audit procedures. I think that was it from me.
Any questions for WR Farmers? Thank you for a thorough explanation of the accounts, and I think our thanks goes out to Nigel and the team for providing everything, making it as straightforward as possible, which I think you'd probably agree with.
Yeah.
And I think that hopefully gives the board reassurance of the transparency of the running of the company, both externally and internally. So if we move on to item 8, the internal audit report.
Thank you, Chair. I'll give a brief summary of the report, which is on pages 73 to 80 of your pack. So the report provides a summary of internal audits work for 2023-24, along with my opinion as the Chief Audit Executive on the internal control environment. So 4 good assurance opinions were given during the 23-24 year in respect of finance, debtors, procurement, corporate governance and risk management systems. Reasonable assurance was provided in respect of the IT strategy. A total of 6 recommendations have been made across the 5 audit areas during the financial year. And audit work highlighted one significant issue relating to the IT strategy. A management action plan is in place to address those recommendations and agreed timescale for the implementation. So paragraph 7.10 details the audits completed along with the assurance level. The internal audit team has achieved 100% of the agreed plan, which is in line with its target. 3 reasonable, 5 in each case, positive management responses were received in terms of the recommendations and will be followed up during the current year. So based on internal audits work undertaken and the management responses received, the company's governance, risk management and internal control processes are sound and working effectively. I can deliver a substantial year-end opinion on West Mercia Energy's internal control environment for 2023-24.
Great, thank you, Barry. Anybody got any questions? Just yeah.
Thank you for that. Just every time I see anything that requires attention on debtors, I always running my own business, get squeaky with it really. Just identifying within that table on 7.1 requires attention on the debtor system. I obviously understand we had a significant on IT strategy, which you headed off in terms of the response. Are you able to elaborate what the item was on that debtor system? Or
I haven't got the report in front of me at the moment. I can clarify.
If you could just clarify it for me later, in writing or whatever else in terms of it, I'll be interested to know what it is.
So we've got further information for you.
Yeah, I think it was at the unbilled validation report that was compared the one year to the next year, and just making sure that was kept up to date, which we're sort of following up, continuing to do that. And so at the end of next week, we got the internal audit next week, so it'll be good then.
Yeah, that will be followed up as part of the 2024-25 audit programme.
Are you happy, Councillor, that it can be recovered at the next meeting in March? That's fine. Great, thank you. Right, anybody else got any other questions? Quite straightforward. So we've got recommendations in item 6 and recommendations in item 8 as stated in the report, so quite straightforward. Do I have a proposer, please? Thank you, councillor Stoddard. Seconded. Councillor Kent, all those in favour? Thanks very much. Great. Now the nice bit. Item 9, distribution of surplus. Any chance we could put a couple of notes on the end? James.
Thank you, Chair. Okay, so the distribution of surplus is the paper that's brought every year. It looks at the overall surplus generated within the joint committee, and that's distributed to the 4 owning authorities after the calculation of a retention. So it's probably best just to look at section 6 as a starting point, which is the calculation of the retention. So a figure of 1.7 million is held in relation to capital at risk for gas and electricity. This figure has increased over the years and relates to the level of turnover within the organisation. So as the costs has gone up in relation to that, so has the level of risk associated with it proportionately. And then there is always a general retention held, which is capped at around about £100,000. So 1.805 is the figure that has been retained. If you then go back to section 4 and the financial implications there, the balance as at the 1st of April 24 as a result of the profitability from the previous year was £4.2 million. That means that to maintain the retention of 1.8, it allows 2.438 million to be distributed. The distribution basis has been agreed and set out for the last few years within the agreement, and so section 7 then, based on that formula, identifies the level of surplus which is due to each of the owning authorities, which comes to the £2.4 million, and it's proposed that those payments are made in October 24. So the only recommendations there are to confirm the level of surplus and to confirm therefore, confirm the level of retention and therefore confirm the level of surplus that can be distributed to the owning authorities. I'll take any questions, Chair.
Any questions from anybody? That's okay.
Yeah, good. Actually delighted with this to see an increase from, I think it was 1.4 million last year to the level that we are now. It's seeing all of the partners involved reaching some over 40% increase in the actual funds that have been returned. So I know we'll obviously cover that on a business plan and training performance, but I wanted to highlight congratulations in terms of it, and also reiterate the comments of Councillor Butler. Could you stick another couple of zeros in the end?
I have to say, such an increase in our dividend couldn't have come at a better time for all local authorities, I think. What I would ask, perhaps, Nigel, when we do look in the event at the update on business plan and trading performance, that as we've got quite a few new councillors here, you give a brief resume of the increase in trading over the last 3 or 4 years. We don't want to have people to think expectations to be too high. Yes. Yeah, lower expectation and overachieving. That's the way to do it. So, right, we have a recommendation there to approve the distributions. Do I have a proposer, please? Thank you, Councillor Stoddard. Councillor Kent, seconded. All in favour? You're not going to refuse your money, are you? No. Right, so we have item number 10, risk management update. Nigel Evans, please.
Chair. So just to run through this, so in line with our risk management strategy, I'm obliged to present to committee any medium or high risk at each committee meeting. So if we go to page 86, on the table 5.4 sets out the risks I see as myself and the team see as medium. Overall, we review the risk strategy formally twice a year. We've highlighted 83 risks to date, and most of those are mitigated through controls and actions to get them within a reasonable risk level. But 4 remain as being medium. So let's run through those. The first one is regarding to unvetted prices. It's always difficult when we've seen volatility in the energy markets, and this was particularly prevalent in August and September 22. And given our gas contract was in place, we traded through that period, and as a result, we got a bit of baggage on our price as a result. Time is everything really on trading. Our electricity contract was the other side of that mountain peak, as it were. So we're more closer to market on power. So we are slightly away from market, so that risk is there given the volatility we've experienced. In terms of the second risk, breaching our capital risk from trading within the year, that risk is always there. We've actually re-evaluated it from a high to a medium, because we feel we've got so much experience of operating the strategy, and we've come through really difficult, challenging conditions. We feel it's not really a high risk. It's still a medium risk, but we felt it was more appropriate to reduce that one. In terms of central government risk, I think that's still there. We see that on occasions where certain sectors of the market look to consolidate their procurement strategy for energy. So, for instance, the NHS looked at their procurement of energy, and they buddied up with Crown Commercial Service, which is often the way, which is the central government-run procurement entity. So we saw one NHS trust move to that arrangement in the future from us, but that's a small part of our business, NHS. Our biggest part of our business is education. So for gas, it's 53% of our volume. So we're not seeing anything of note there, although the DfE are running a pilot scheme of offering support to a group of customers, again through CCS. So myself, particularly Gavin's been working closely with the DfE. We are an approved framework, and we've actually seen some referrals from the DfE as well. So it remains as a medium risk, and we're keeping a close eye, particularly on what's happening in the education space. And the risk number 4 relating to ownership of the suppliers, that's still there. It's what perception is of customers, really. We're not seeing a great issue on that these days, but I've left it as a medium risk. Pleasingly, 2 risks that we identified as being medium previously, we've reevaluated down to low. The first one related to the change of our supplier on the electricity contract. And the risk related to unexpected consequences of a change. The electricity contract is our main contract, so if something popped out that we weren't expecting, it could have an issue on the business. Pleasingly, the move from Total Energies to npower went as smooth as it could have done. All the supplies transferred on time, and we're really pleased with the trading support they give us and other support as well. So we feel that risk has been managed really well and needs to be reduced to low. And the final one we had as medium before was delays in payment from key customers. And as you've seen from my monthly reports and conversations around the cash balances, we're managing the cash pretty well. We're always positive. We're getting customer receipts in on time. There was a concern when one authority declared bankruptcy, and we're not Birmingham City Council, but we haven't seen any delays significantly on any payments from large local authorities. The only time we do see a delay is where there's a system change or a change in personnel. So it's not as a result of they haven't got the money or not willing to pay us. So we feel that risk, therefore, should be reduced to low. But we're keeping obviously a close eye and managing our bad debts very closely still. Great. So I'll take any questions again.
Thanks, Tom. Thanks for that. Do you just say any particular framework as your risk? Is it management of risk, or do you have a framework at all you use?
In terms of our trading strategy, that's a risk strategy that we've developed over a number of years. Initially, we worked with a consultant called Schneider. That in the end, we felt we knew more than them on the strategy, and we parted ways 3-4 years ago. So the trading strategy is under a detailed document called Energy Governance accounting risk and reporting, which you have the delights of seeing when we make any changes. So that will come to committee if we deem any changes necessary.
Thanks very much.
Yes. The only comment I'd like to make, Nigel, is that you mentioned that quite the majority of your training is with education. I'd be interested to see what other councillors feel. I'm picking up from across the board, from academies and in-house, that the education sector is moving into severe financial difficulties. So I don't know if anybody else is picking that up.
Our concerns more on the direct support, the education grant that we cover.
Yes,
It's quite a process. I think we're about
it kicks on, doesn't it? But, talking to some academies, I just thought you're probably aware of it, but if you're not, just be aware that they're going to be in the same situation as some of the councils, I think.
Yeah, sure. I mean, we've done some analysis on academies and education, and we're quite interested in. We obviously focus on energy. We think that's a big spend, but when you look at the overall spend of a school, it's around
2 to 3%. So
it's a
it's pretty
big one.
Yeah.
So
we were surprised, really, weren't we?
But I'm just thinking about the payment. That's
Yeah.
so okay. Thank you. Everybody happy to move the recommendations? Great. Yep. Thank you very much. Right. Item 11, standing orders.
Thank you. Yeah. So I tried to get ahead on this really. So when I wrote the report, the new Procurement Act was coming into place from I think the 28th of October. So I thought this is my chance to get the standing orders updated and signed off before we come back together in March. But at the start of the week, the announcement was they're deferring it until February. So it's there ready. I would suggest I'll just make a change to it and say it'll come into effect when the Procurement Act comes into effect. But basically, it was getting ourselves ready to ensure that we've got our standing orders ready to go when the Procurement Act kicked in. We reviewed it internally. Our head, the guy who oversees our procurement, he's sat on the relevant courses and webinars and has got a really good understanding of that and made the suggested changes. And then we run it past Nigel Denton, who's the Commissioning Development Procurement Manager at Shropshire. He's got a good steer on it. He's suggested some changes, and that's in the track document that came across. But it's basically updating it ready for the new Procurement Act. I'm happy to run through the changes, but that's the gist of it, really.
Everybody happy? I suggest for the ease of housekeeping that we just put that amendment in, that when the act comes in, it automatically kicks in. I don't want you to be bothered to bringing it back to us again.
Yeah.
That's all right. Thank you. Okay, exclusion of press and public. To consider a resolution under section 100A of the Local Government Act 1972, proceedings in relation to following items should not be conducted in public on the grounds that they involve the likely disclosure of exempt information as defined by the provisions of Schedule 12A of the Act. So close the meeting for a short time.